This is Founder Fundraising Feedback. If you're new here, welcome. If this is your second or third time, welcome back. So if you're a founder that has questions about the fundraising journey, throw your question in the chat. If you don't know where to find investors, what they look for, what should be in your pitch deck, what should be in your data room, feel free to throw it in the chat. You'll have my best effort to answer it. Does a customer base of 10 active customers mean we're ready to engage investors? Honestly, that depends. If the customers pay $1 a piece, probably not. If the customers pay $1,000 a piece and you have $10,000 in revenue, might be a great time to engage investors. It just depends. Thoughts on safe cap, no discount versus uncapped FFN term sheets. This is from Gideon. Gideon, that was a lot. So first of all, for those that don't know what a SAFE is, a SAFE stands for a simple agreement for future equity. It was created by Y Combinator about 12 years ago. It's the most widely used vehicle for early stage tech investing. My personal opinion, Gideon, I don't like uncapped SAFE. I've never had an uncapped SAFE. I would rather a valuation cap that everybody agrees on. If you want to give a discount, great. It's an incentive to the investors. It's not required. I've invested in no discount SAFEs with a cap. I've invested in some with a discount, but I don't like uncapped SAFEs. You want some sort of clarity. I know it's all about kicking the can down the road till you get to that first price round, typically at a seed or a Series A, but I do like to have some sort of clarity around what I'm investing in. I hope that's helpful. How can you be connected? There's a couple ways. If you want to book a call with me, I do calls every week with founders. There's a link in my bio right here if you want to book a call. If you're not ready for that, or you're just getting started and you just want tips and tactics on how to fundraise, I do a weekly newsletter. It's 100% free. It comes out every Wednesday. There's a little yellow link on the bottom left of your screen. Click on that link. You can join my newsletter. Those are two ways to get in touch with me. The ones you spoke to require $1 million in ARR. Yeah, they're definitely the wrong investor. You're probably talking to investors that are too late downstream. You're probably talking to funds and VCs. You probably should be talking to angel investors, or maybe even doing what's called a friends and family round at those early stages. It's not a rich uncle. It's just people in your ecosystem, maybe former colleagues or friends that know you, know what you're working on, would be willing to make a small investment, maybe $5,000 or $10,000 to get you started. What's my contact information? Link in my bio if you want to grab a time, right there. Need to take my business to the US from the UK. Do I know any investors? I'd hope so, considering I am an investor. I do. And I've actually backed companies from the UK. My best guidance would be, before you come to the UK and before you look at US investors, I would say make sure you have a product in market, make sure you have paying customers, make sure you have revenue growing, and make sure you have a strategy around going from a UK Corp to a Delaware Corp status. And the main reason, US investors are not going to invest in a UK corporate structure. The laws are different. We don't understand it. And if you want a US investment, you're going to have to be a Delaware Corp. If you don't know how to do that conversion, I have a couple of fabulous law firms that have helped a number of my UK founders do that conversion. I'm always happy to make an introduction. Just shoot me a DM and reference this conversation. And thanks so much for being here. You're doing an in-store demo. Was at the crepe shop this morning. I love it. Do I invest in Armenia? I haven't yet. Doesn't mean I wouldn't look at a company there. I'm actually doing a deal right now in Greece. I've done deals in the UK, Germany, Australia, the Philippines. They just have to have a Delaware C corporation to allow for US investment dollars, which is where a majority of my investors are located. You're setting up a legal entity. Awesome, man. That's the next step. I love it. If you need help with that Delaware conversion, just shoot me a DM. How to get capital investors for private lending business. I wouldn't be the best person because it's not traditionally a venture deal. I spend most of my time in early stage tech ventures, and I don't like to speak to things that I can't provide ridiculous value for founders. I hope you understand. What do we need to do for you to invest? I mean, honestly, let me give you the top 3 things. You need to be a badass founder that's not going to quit. You need to be able to recruit people to work on your team, because solo founders are really hard to get venture funding. And you need to be able to sell. You need to be able to sell people to work with you. You need to be able to sell people to buy your product. And you need to be able to sell investors to invest in your company. It's by far the most underrated but important skill out there. If you don't have a product in market, if you don't have paying customers, if you can't recruit people to work with you, then it's going to be hard to get investment dollars, not just from me, but from any investor. Do you invest in the pet care industry? So this is funny. Adam, thank you for the question. So fun fact, my first ever angel investment 9 years ago was in the pet industry. It was a company called Meowtel, Meowtel, Meow. It's my first angel investment ever. They exited 2 months ago. Fantastic founder from Texas, my friend Sonia. Company should have went out of business 3 times during COVID. She built a cat sitting service to cat sit when you go on vacation. People will come to your house and sit for your cat. She built a company to like 15 million in revenue. She just sold the company 2 months ago to Rover, which is a publicly traded company in the United States. One of the best founders I've ever worked with. Tenacious, gritty, sent an investor update to me every month for the last 9 years. And she could not have been more humble and kind in her kind words to all the investors when she exited. Awesome founder. I don't do a lot in the pet industry. I'm doing less now because I do mostly tech, but I do have a couple of investments in the space, and one of which is one of my 11 exits. Awesome founder. Good return, too. For every dollar we invested, we got $3 back. So 3x return, which I loved. Why not an S Corp with double taxation? Chris, I'm just not an S Corp fan. It's just Delaware C is more common. What you don't want to do, Chris, this is the main thing. What you don't want to do, and I know there are tax advantages. My brother actually has an S Corp. There's a lot of tax advantages there. You don't want to spend your time talking to an investor about S Corp versus C Corp. You want to spend time talking to the investor about the badass company you've built and your customers and the revenue and the growth. That's really the reason, Chris. It's not that S Corps are bad. You just want to do what people are most comfortable with and what works most of the time. That's my opinion. For those that want more tips and tactics on stuff like this, I actually do a newsletter every week. It's free for founders. There's a yellow link in the bottom left of your screen, that little up arrow. Just click that. You can join my newsletter completely free. Get tips and tactics every single week. Do I invest in Algeria? I have not to this point. Doesn't mean I wouldn't look at a deal in Algeria, but I haven't to date. As long as it's a Delaware corporation, fantastic. BioKeeper, fantastic. Delaware Corp, check the box, man. New here, Corpius, welcome. What are you working on? Are you thinking of raising money? Throw it in the chat. Is 3x expected? What do angels expect versus VC? Dave, that's a great question. Dave, I just want great outcomes for the founder and me. Everyone wants a bigger return, Dave, honestly. Would I like 10x, 50x, 1000x? Of course I would. However, what I really want is a great outcome for the founder first and foremost, and then me. I want us to have aligned incentives. Some of my greatest exits have been 3x, 5x, because it's just what we could get. And sometimes not everybody's going to be a unicorn. Not everybody's going to be the next Airbnb or Uber. And that's totally fine. I just want great outcomes. Any X is a good X for me, Dave, as long as it's not 0. I hope that's helpful, man. VCs, though, Dave, to answer your question, VCs need bigger exits. What they say is they have to hit home runs. They go for unicorns. They want companies with $1 billion valuations because the funds are so big nowadays. They might have 100, 200 million, $1 billion fund that they have to return, so they have to swing for the fences, which is very different than individual angels like myself, which are putting personal capital to use as opposed to hundreds of $millions of other people's money. Very different perspective, Dave, and that's an awesome question, man. Thanks for being here. Only, Adam, C Corps for investors, specifically Delaware C Corp is the most widely used investment corporate structure in the world. That would be my preference. 69 investments, Adam. 0 have not been Delaware Corps. That's just my opinion. I have a startup in Dubai and I want to do a holding co in Delaware. What do you think? Ahmed, if you want to sell to customers in the United States, if you plan on taking U.S. investment dollars, I would agree with you. I'd absolutely recommend a Delaware Corp. Is a good thing to look at. If you're not familiar with how to do that, I'm always happy to make a recommendation to some law firms that have helped some of my international founders do that. Just shoot me a DM, reference this conversation. Thanks for the question, man. The big thing, Ahmed, is you want to make sure that the company has users, has revenue, is growing. Like you don't want to do the expense of flipping that to Delaware Corp and come into the US until you have those things. If you do, fantastic. If not, I would wait till you have sort of checked the box on the users and revenue before doing the Delaware Corp conversion. I live in Georgia. Should I create an LLC in Georgia or another state? So this is Bone Crusher. If it's a services business, LLCs are totally fine. For example, I have a services business that works with early stage founders. But if you're going to raise venture capital, specifically outside venture capital, traditional venture, you're actually going to want to be a Delaware C corporation because investors will not invest into LLCs. Now, if you're not going to raise right now, you can do it at the time of the raise. You don't have to start it as an LLC. Most of my portfolio companies started as LLCs. However, when they wanted to raise outside venture, they converted to a Delaware C corporation. Great question, by the way. What are the best one-stop shops to incorporate? I have a couple of my favorites that have helped probably a third of my portfolio companies. Excuse me. If you need a recommendation to one of them, I'm always happy to recommend them. Shoot me a DM, man. Just reference this conversation. Happy to hook you up. Restaurant business, not a venture scale business. I love restaurants. I'm actually a chef, but restaurants are not really venture scale. Those are actually traditionally things like bank loans to do restaurants. Do I invest in European entities? I have. I have companies in my portfolio from the UK, Germany. I also have companies from Australia, the Philippines. However, in every case, they had a Delaware C corporation at the top. So, for example, if it was a German corporation, they converted to a Delaware C parent company and put the German subsidiary underneath it. And the main reason was to allow for U.S. investors to invest into the company. I hope that's helpful, man. Any advice on analysts getting started in VC? They want me to become a partner in 2 years. Learn as much as you can, ask a ton of questions, do a lot of stuff for free for startups, and try to provide ridiculous value to your portfolio companies. You'll be amazed at what can happen. I wish you nothing but the best, man. Where do Delaware C Corporation aligned investors hang out? Great question. So, where do you find investors? There's a couple places. TikTok, you're talking to one right now. Hello, Hands on Angel. LinkedIn is a great one. So, for example, let's say you're in New York City. Go to LinkedIn, filter by New York, and then type the word angel investor into the search bar. It'll give you hundreds of angel investors in New York. It'll also tell you how many of them have first, second, and third level connections to other people that are connected to them and you. Do not reach out to the angel right away. What you want to do is you want to reach out to that common connection. It might be a former colleague. It could be a cousin, a friend. And you want to ask them this. Hey, I noticed you're connected to Steve on LinkedIn. Well, we're building a company in a space where he invests. And we'd like to know, would you be willing to connect us to him so we could talk more about what we're building and see if him or anyone in his network would be interested in chatting? That's it. Do that 20 times a day, 5 days a week. You'll be amazed at what can happen. That's the first place. The other place I would look, Signal FX, Signal FX. It's a website where you can search by stage, pre-seed, seed, series A. You can sort by whatever sector you're in, fintech, health tech, ed tech, whatever sector your company's in. And then you can download that list of investors into a CSV. You can do, it gives you their social profiles like LinkedIn. You can reach out to them on social. So it's a great tool. Those would be the two places I would look. And for those that want more tips and tactics like this, there's actually a yellow button in the bottom left of your screen. It's a little up arrow. That's my free newsletter. Click on that. I come up with a free newsletter every Wednesday at 11 a.m. It's tips and tactics that works really well. I profile founders. I talk about tips on how to raise, where to find investors, how to write a pitch deck. Bottom left of the screen, there's a little yellow arrow. Just give it a click. Thanks for being here. Is it better to raise or stay private or go SPAC? I'm not a big SPAC person. A lot of people lost their shirts that way. Staying private and bootstrapping, not a bad thing. Owning your company, owning your destiny. Raising venture capital is a very individual decision. It's only what's right for your company and what you want to be. I have friends that have built companies to $5, $10, and $20 million and have never raised a dime of outside capital. So just because I raise capital for people for a living doesn't mean I think it's right in every sense. In fact, in all the companies in the world, only 10% will ever raise traditional venture. So 90% won't. There are other ways to do it. One of my favorite portfolio companies is from the Philippines, a company called Edify, EDIPHI. My friend Christina started the company in Manila. She now lives here in the United States, but her entire operations team is still in Manila. Awesome company. She bootstrapped the company for 3 years, got it to $1.5 million in revenue before we ever raised her first round of venture, which we raised 3 years ago. She just finished last year at $3.5 million in revenue. She has a path to $6 million this year. And we're raising a $3 million seed round for her right now. Can you send me a deck? Check out my website if you want to submit something to me, handsonangel.com. Do I invest in secondary? I don't. I get offers every week to invest in secondaries. It's just not part of my thesis. It doesn't mean they're bad. It's a great way for founders to recoup some capital, get some returns earlier instead of waiting for their company to get bought or an IPO. It's just not something I participated a ton in. Talk about signing NDAs before someone ever brings to an investor. Nah, NDAs are no bueno for me and for most investors. Any investor worth their salt is not going to sign an NDA. I've had 69 investments. I've looked at 6,000 companies in the last 9 years. I have signed this many NDAs, zero. They're not worth it. They're very hard to enforce. It's not worth it. You want to get as many people as possible looking at what you're building. The goal is to not keep it to yourself or keep it under wraps. The goal is to get it out there in the ether, to make sure as many people know about what you're building as possible. What's the best place to find startup money? Adam, that depends upon where you are in your journey. Candidly, if the product's not launched, if you don't have users and paying customers or companies using your product, I would focus more on customer acquisition than trying to raise money. However, if your product is launched, if you do have paying customers, if revenue is growing fast and you feel it's a great time to get outside capital, then you can, LinkedIn, as we said it before, LinkedIn's a great place because you can sort by location and title, angel investor, venture capitalist. Signal FX, Signal FX, another great place because you can sort by stage, pre-seed, seed, series A, and you can download a list of investors that invest in, along with their check size, or even Crunchbase, crunchbase.com, because you can look at other companies in your space that have successfully raised. It'll tell you not only when they raised, it'll tell you who they raised venture from. And then you can actually see what firms they raised from, and you can target those firms to raise from for your company. I hope that's helpful, man. Bioplastic company, Harry, not really my specialty. I'm more of a tech investor, mostly software, so I wouldn't be the best person to talk about where to find that from. I always like to talk about things that I have the most experience in. What's the best place to find gold mining financing in Africa? I wouldn't be the best person. That's not a tech company. I do software technology mostly, so I wouldn't be the best person to talk about with that. Do I think financial literacy for kids in Africa is a problem worth scaling? I don't know. I don't live in Africa, although I know companies in Africa. I think you'd be a better judge of that than I would. Financial literacy is important. I absolutely do. I think it's not taught in schools enough. My dad was an educator for 35 years, was a principal. I think the fact that kids can graduate high school and college and never have to take a basic finance course or a budgeting course on how to budget or credit, I think is ridiculous. Do I recommend reaching out to people cold? And how should you reach out? This is from G. I think warm introductions are always the best. However, if you can't get a warm introduction, what you could do is go to LinkedIn, sort by your location. Let's say you're in Chicago, and then type in angel investor into the search bar. It'll pull up a list of hundreds of angel investors in Chicago. And then what you can do is you can see common connections between you and them and see if there is anyone in common. Maybe it's a former colleague or a friend. Don't reach out to the angel right away. Reach out to that colleague. Hey, I noticed you're connected to Steve. And we're building a company in a space that he invests in. I wanted to know if you'd be willing to make a quick introduction to Steve so we can share what we're building and see if he might be interested or anyone in his network. And do that 20 or 30 times and see what happens. It's a great way to turn those cold leads into warm ones. That's what I would suggest. Should I go to San Francisco if I want to meet people in defense tech, or is there a better place in the U.S.? Well, I'd say Washington, D.C. is probably a pretty good place for defense tech. I hear this a lot from founders. They ask the question, should I move to San Francisco to raise money? San Francisco, Silicon Valley specifically, is the number one market for venture capital in the world. It has been since the inception. However, New York and Boston are second and third. Austin, Texas is a great place. Chicago, Miami, those are all strong venture capital markets. And in this world of post-COVID, most of the time, that first and second meeting's happening on Zoom anyways. So you don't physically have to be in the markets to even raise from Silicon Valley. So is it better if you live in the middle of the ecosystem? Sure, I'm sure that's better, but it's not required. Not as much as it might have been 5 or 10 years ago. I hope that's helpful, man. What signals make you take a founder seriously? That's a great question. At the early stage, it's really a bet on people. Am I talking to a founder that's not going to quit? That they understand that being a founder is hard on a daily basis. They're going to get knocked down a lot, and they're okay with that, and they're going to come back tomorrow and do it again. I really look for founders that can recruit other people to work at their company to help them build their companies, because you really can't build a venture scale company on the backs of one person. So can they recruit others to jump in with them on their journey? That's number 2. And number 3, can they sell? It's that number sell should be number 1. If they can't sell people to work with them, if they can't sell customers to buy their product, if they can't sell investors to invest in their company, they're done. they're not going to make it. Those are the things and the signals that I really look for early on with a founder. Notice I didn't say product. Product's going to change over time. It's going to morph over time. Markets are going to shift. But people and their ability to communicate and their ability to sell doesn't. Those would be my biggest signals. And for those that want more tips and tactics, I actually do a free newsletter every week. It highlights how to raise money, where to find investors, how to write a great pitch deck. There's a yellow up arrow on the bottom left of your screen. Just click that. Feel free to join my free newsletter. Comes out Wednesday, 11 a.m. every single week. Would love to have you. Do you support startups and what stage? This is from Jack Lines. Jack Lines, thanks for being here, man. Welcome. Yes, so I am an early stage tech investor, usually pre-seed. 80% of what I've done, I've invested in 69 companies. I've helped those companies raise $1.4 billion in the last 9 years, and I've had 11 exits to date. Traditionally, 80% of what I've done is in B2B and 20% in consumer and CPG. Let me tell you some of the industries I've invested in. Sports tech, I'm a former college athlete, so I love sports and sports tech. Ed tech, my father was a principal for 35 years, so I've done some stuff in ed tech. I love fintech, financial tech. And I love how money moves, cross-border payments, so I've done a bunch of stuff in fintech. I've done health tech, things like APIs that connect to wearables, because I think health tech is a really fast-growing space. I've done some logistics tech. So those are some of the verticals that I've done. And the stage, almost predominantly pre-seed. Almost everything I do is early stage, post-product, post-revenue companies. I hope that's helpful, man. Recommend starting with affiliate revenue or going straight to white label partnerships. Why not both? I think you could A/B test both. I think that's a good idea. I think you should do that. See what works. See what you can get traction, and you don't know until you try. What I always say, I have two boys. What I always say is we learn by doing. That's what I would do. San Francisco is a whole other world. It is a faster pace. It is the biggest venture capital market in the world, but it's also one of the most expensive places to live in the country, in the world. It's not for everybody. Some people don't like it or like it. It's totally your decision, man. Investor side, red or blue? Honestly, both. What I will tell you is that the current administration is red tends to be more investor friendly, more capitalist friendly, especially the laws being created right now. I would say it's a very pro-business environment. Doesn't mean I support either side. I just think that that's the current environment, to answer that question. Would I seriously consider investing in an early stage African ed tech startup? That depends. Is the company have a product to market? Do they have paying customers? Is it growing fast? Do they have a structure that allows for U.S. investors like a Delaware C corporation? If yes, sure, I would consider it. But if not, they probably should spend time getting customers, getting feedback, figuring out their monetization strategy. That would be my honest guidance. If you build in public, don't you think people will copy it with agents? You can't worry about that. Your job is to build as fast as possible, the best service or product as possible, get it into the hands of as many people as possible. If you worry about keeping it from people, NDAs, trademarks, patents, you'll lose. You will lose. Get it out in the market as quickly as possible. You want more people to know, not less, especially at the early stages. Can I help you with your pitch? Possibly. I do a certain number of one-on-ones every week with founders. If you want to try to grab a time, there's a link in my bio right there. How would you approach investors on LinkedIn? Sure, Martin. Martin, this is what I would do. Martin, go to LinkedIn. Let's say you're in Los Angeles, Martin. I'm just making it up. Go to LinkedIn. Under filter, you can filter for Los Angeles, and then type the word angel investors into the search bar and hit go. You're going to get a list of like 200 or 300 people who are angel investors in Los Angeles. Don't reach out right away. What I would do is look for common connections, first, second, and third level connections between the angel investor and you. These might be former colleagues of yours, maybe a friend or a relative. You're not going to reach out to the angel investor. You're going to reach out to the. This is what you're going to say. Hey, I noticed you're connected to Steve, and Steve's an angel investor in a space that we're building a pretty exciting company in. I wanted to ask a favor. Would you be willing to make a quick introduction on LinkedIn between me and Steve so I could tell him a little bit more about what we're building and see if he might be interested or someone in his network might be interested? That's it. Do that 20 times a day, 5 days a week. You're going to be amazed at how many connections you have and how easy it is to get meetings by doing that. That's what I would do, man. Appreciate you. Appreciate your question, by the way. To develop, where can I bring this info and prove to raise capital? What do you mean by to develop? If you want to develop an MVP, I've got folks that actually work on MVPs for founders. I don't really understand the question. Is a car needed in San Francisco? Silicon Valley, if you're going to be in Silicon Valley outside the city, yes. If you're going to be in the heart of the city, probably not. You can get around with public transportation, even a bike or a scooter. Movies, screenwriter who wants to develop a movie, not typically venture scale. I wouldn't be the best person for that. I like to be pretty candid with founders about what I am and not really good at. So I wouldn't be the best person for that. Is Kenya supported? I have done investments in the African continent. My favorite African portfolio company is a company called Fonbank, Fonbnk. My friend Chris is a 3-time founder, sold his last company to SoFi. However, all my international companies, Africa, UK, Germany, Australia, all are Delaware corporations, which allows for US investors to come into that parent company, and then they might have an African or a European subsidiary underneath them. So that would be my only stipulation. How would you know that you're ready to bring in investors? D, this is a great question. D, thanks for being here. D, the honest answer, it's not even revenue. It's sort of a feeling. Here's the feeling, D. There's not enough hours in the day to talk to the number of people that want to talk to you. You have a massive wait list and it's growing. You can't keep product in stock. Revenue is growing so fast, you just can't keep up with it. People are tripping themselves over themselves to do business with you and referring more clients every single day. And your revenue's gone from $2,000 a month to $10,000 a month, and it's growing month over month. That's the feeling you should have. And then that's when you should think about, maybe we should bring in some outside capital. That's the feeling, D. I hope that's helpful. And if anyone in the audience wants some tips and tactics on how to fundraise, where to do it, I actually do a weekly newsletter that's free for founders. There's a yellow up arrow in the bottom left of your screen. Just click that. You can join my newsletter, completely free. Comes out every Wednesday with tips and tactics on how to do this. And thanks for being here. By the way, fun fact, and this is coming from the guy that looks like me, 30% of my portfolio, underrepresented founders that don't look like me, founders that are immigrants, women, LATAM, Black. I really don't care. I care that they're great founders building great companies. I could care less where they come from and what they look like. That's just my opinion. I think my world is fuller and richer because I surround myself with people of diverse cultures and knowledge. So that's just me. Minimum MAU traction for EdTech language startup to pitch you. This is from Pablo. Pablo, look, more is better than less. 10 customers are better than one. 10,000 in revenue a month is better than $1,000 a month. But it doesn't have to be $1 million. Here's what I would say, Pablo. I'm being candid with you. If you have one customer and $500 in revenue a month, probably too early. But if you have 10 customers and $8,000 or $10,000 a month in revenue, probably a good time to think about raising outside capital. That's a good time to approach investors. That's my honest take, man. I hope that's. What are the red flags of investors? I can choose my angels. What should I look for? Here's the thing. Here's a question you should ask every investor, whether they're an angel, a funder, or a VC that's coming into your round. What else besides money can you bring to the table? Can you bring other investors? Can you bring partnerships? Can you bring customers? Can you bring resources, service providers? What can you bring? I will tell you this, the least valuable thing, and I've invested in 69 companies, the least valuable thing I've ever given any of them is money. The most valuable thing is access to my network, which is vast and global and has massively helpful resources that can help my founders grow. On a daily basis, I get text, emails, and calls from my portfolio companies that say this, hey, Steve, we need your help with a new lawyer. Our lawyer's screwing us. We need a lawyer that's less. Give me 10 minutes. I'll send 3 emails. Hey, Steve, we need a bookkeeper to help keep track of all this money we just raised. Great. Give me 10 minutes. I'll send an email. Hey, Steve, we need a dev shop to help us develop our next generation product, and we need to hire a few more devs. That is the power of a great network. So every investor that's coming in, ask them, besides money, what else can you bring to the table so my company can grow going forward? That would be my best advice, man. I hope that's helpful. What are the red flags? Red flags, if an investor asks for a board seat in order to give you money, that's a red flag. An investor asks for terms that are different than everybody else in the cap table. If they ask for nefarious terms, if they ask for like super pro rata rights, like anything that's out of the ordinary, those are red flags for me. Thoughts on a single founded companies? Should I have a co-founder before trying to raise money? This is from Neil. Neil, thanks so much for this question. Neil, let me give you the math, Neil. Only you can decide if you want to take on a co-founder, but let me give you the statistics. Solo founders, so single founders, raise venture capital 60% less than teams. Solo founders raise capital 60% less than teams. It's not because you're not a great founder, and it's not because you can't build product. It's risk. Early stage investing is all about assessing risk for investors. And if you're a solo founder, that's highly risky for me, because if you have 3 people on your team, the main reason the companies quit, if I have a portfolio company that goes out of business, most of the time it's not because they run out of money. It's because one of the founders quits. So if you're a solo founder and the one founder quits, the company's sunk. It's not because they run out of money. It's because one of the founders quits. So if you're a solo founder and the one founder quits, the company's sunk less of the time. Now, I'm not arguing go out and run out and get a co-founder right now. They're hard to find, but it's just something to consider if you're going to raise outside money. I hope that's helpful, man. How investor-friendly is space tech? Is bootstrapping the only option? Not if you're Elon Musk. Just saying. I haven't invested in space tech. It's a hot product. It's a hot sector right now. Space tech. I think SpaceX is going to go public this summer, which will be super interesting. They'll be one of the largest companies in the world. Bootstrapping is always good, by the way. Bootstrapping is not a dirty word. Like 50% of my 69 portfolio companies bootstrapped for anywhere between a year to 3 years before they ever raised outside venture. I don't think bootstrapping is a bad thing at all. In fact, I would argue most companies should do it, especially in the beginning. Advice for someone who's stuck in the phase of over-engineering a product to make it perfect. Carrington, this is an awesome question. I think this is the best question of the day so far. Carrington, I'm going to give you 3 words that I say to a lot of my founders that are in this exact position: over-engineer a product. Just hit send. Just hit send. It's the best thing you can do for your product, because whatever you're building, however perfect it is, as soon as you launch it, half of what you built is going to be wrong. You're going to launch it in blue, and customers are going to say, we wish it was red. You're going to have this feature set. They're going to want that feature set. So just hit send. The best thing you can do is get feedback, because the faster you get that feedback, the faster you can iterate and then relaunch and turn that, what they call the flywheel, and that flywheel of development. The faster you do that, the better. Don't wait for the perfect time. I had founders that pitched me, 4 founders, college friends. They put $800,000 of their own money, $200,000 apiece, into developing their product. They pitched me for an investment. And I said, $800,000, my God, that's insane. Now, the product was fantastic. But I said, if you guys have spent $800,000, you must have thousands of customers. They're like, oh, we haven't launched yet. I'm like, what? Like, we haven't launched yet. I go, you spent $800,000, you haven't launched the product? Like, what are you doing? That's awful. They're like, well, it needed to be perfect. I'm like, it doesn't need to be perfect. It needs to get out there to find out if anyone cares. They're like, oh, everyone's going to love this product. I'm like, says who? You? I didn't back them, and they never were able to raise the round because investors looked at it and said, what do you mean you spent $800,000 and never launched the product? You absolutely want to get it out there as soon as possible, Carrington. So my advice would be just hit send. Did they validate it? No, they didn't. They never validated it, and they never raised the round. It's the dumbest thing I've ever seen. $800,000 on an MVP. It's the best looking MVP I've ever seen, by the way, and the company never raised the round, and they're now out of business. Talk about having that conversation with your significant other. Oh, analysis paralysis, Carrington. It can kill a startup. Just hit send. Show it to people. Build content around it. Get feedback. Feedback is a gift. Use it to your advantage.